Oh, there we go. Yo, what's up, guys? So I just got on. I wasn't able to get to the computer earlier, but as you guys know, it's Monday, so there's no news today. And because there's no news, it's really not a good day to day trade, to be honest. But that doesn't mean that we can't cover, the setups that are happening right now. Just so you can, I guess you can back test and just get some ideas of why price action doesn't behave the right way on days like this. Why it would or why it wouldn't do something when it's supposed to or when it's not. Because, when there's no news on a Monday, typically that means that the market is not going to behave the way that it should. So price doesn't deliver as efficiently as it would on a day where there is a lot of news and a lot of volume. Now, a lot of people will blame that on lack of volume, but also you have to understand that the algorithms are designed to work efficiently on days where there's news. So there's different conditions in the market. So for example, one of the conditions that ICT talks about is the seek and destroy program. And what happens is that day is designed to get people to blow their accounts. Because the market doesn't deliver to one side or the other, it chops around and people get stopped out on their positions. They go on tilt and they lose a lot of money. So that is one of the reasons why a day like today is not a good day to trade, because there's a lot higher probability of seek and destroy conditions. But regardless of that, let's go over what we're seeing here. So I called this in the Discord. I posted this in the Discord, but I don't really care about how the market delivers, but the end goal for me is to get to this 50% level of the leg. Where does that come from again? I've talked about it many times on X and on live streams, but it is the 50% retracement of this entire down move that we had. This whole move that we had starting from July 11th and finishing on August 4th. This whole move, the 50% retracement, is where algorithms tend to spool price. And why do I think this is such a perfect place for the market to go? Well, number one, it's because there's this very bearish fair value gap. It's obvious, right? If I draw it out for you guys, it's from this low to this high, okay? This was an area where the market did not deliver efficiently, right? There's so much selling pressure here. There was not enough time for buy orders to get filled. So what will happen here is eventually the algorithm will spool price back into this fair value gap to balance the market, fill the unfilled orders that weren't able to get, that weren't filled within this whole period of time. And then the market will decide, you can say that it's to do with CPI or unemployment or red folder news, whatever you want to believe. The algorithms, in a sense, plus the data that comes out from the market, even though it's all combined into one, that is going to determine whether the algorithm pulls price back up to buy side, and all-time highs, or if it now uses this as an efficient delivery to go down and ultimately take out this sell side liquidity at 17,338.75. This is the ultimate target for me, like I said, as I believe we are in a sell program, but it's very difficult to determine if that will deliver efficiently in one go or if we'll make all-time highs first before. So basically what I'm saying here is that the highest probability move in my eyes for the next place the market to go, my bias is bullish to this 50% level. And why? Again, because it matches up with a very bearish obvious 4-hour fair value gap. There are equal highs right here and equal highs right here, and the 50% retracement is in line with this red line, which was this major sell side liquidity that we had here on the 4-hour. So that's also a place where I think algorithms magnetize to. When there's a big area of liquidity that was taken out, we also tend to go back and rebalance, sometimes even to the tick of that level, and then we'll continue the delivery of selling. So yeah, basically what trades am I in right now? As far as day trading, I am in 0, but I have been adding QQQ personally in this general area, like around this 18,000 level equivalent to where QQQ was. If I'm not mistaken, let's go back and see QQQ. By the way, excuse all these lines. This is actually a program that I've designed. I mean, it's not really a program, but it's basically a code that marks the weekly highs and lows, and then it marks the monthly highs and lows, the quarterly highs and lows, and the yearly highs and lows. So yeah, actually I have to recheck the program because it should have marked the newest weekly low. This is not the newest weekly low, but where was I adding? I was adding below this quarterly high. So in this general area I was adding where all these weekly levels are. And my ultimate target again for this is going to be this general area. This weekly high is a ideal spot for me personally. And that was where I would probably take off some of the position and I would hold runners back up to all-time highs in case we get that. Oh, let me can I share this? If I go on YouTube, I forgot to share this to X, so I mean maybe we'll get some people to join, but let's see. Let's share it, copy, and we will hit paste. Okay. So what else do we see here? Well, let's go to the daily and just see what we have. So, I mean, there's a lot here, but obviously this purple box that you see was that 4-hour bearish gap. We also have a daily volume imbalance here that needs to be filled. We also have a daily volume imbalance here. It's not as obvious, not something that really is a target to me personally, but we do have this very obvious daily bearish fair value gap that needs to be balanced as well, so maybe we go there. Where's my label for here? This is a daily FEG. On the hourly, is there anything to note? Are these equal highs here? No, I keep getting fooled by these. They're not equal highs. But yeah, the draw right now, I mean, the most obvious thing to me is this internal high right here. So we're probably going to be going here next. So if you really, really wanted to, let's change this to black. If you really wanted to take some kind of if you wanted to try some kind of a setup today, then we could go down to the 1-minute chart and see if we get something up to this take profit. So we're in a macro time right now. So in theory, the delivery to this buy side should happen in this macro, which is in the next 20 minutes, right? Because the macro started at 10:50 and it ends at 11:10. So what could we see here? I mean, there's a few different situations, but one of the ideal ones that I see personally is this 1-minute fair value gap. We could come back down here, inverse this 1 minute, and then go higher, or this is a much more lower probability setup because we're not taking out any liquidity, but we could take this, we could inverse this 1-minute IFVG right here, and we could take that all the way up to buy side. But again, this would be a lower probability setup because there's no liquidity being taken. The liquidity is right here, right? So all the people that are long in the markets right now, their stop would be below this low, right? And once they get stopped out of the position, or even potentially down to this low, once they get stopped out of the position, we rebalance the 1-minute fair value gap, and then we generate momentum back to the upside. That would be where you could take, for example, if a setup formed right here, right, we get some kind of an IFVG, take it up to here, and your stop now would be reduced quite significantly. So, I mean, I would do it to below the IFVG, right? Let's say we close above it like this. So that's almost a 5 to 1 hour trade. But if you want to be a little bit more safe, you could bring it down as a close below this 1 minute. And that could also be a good place to have a stop loss. But then again, you see that the RR changes drastically, right? Because now it's a 2-to-1 trade rather than a 5-to-1 trade. But again, that's your odds of getting stopped out of that trade are much less, much lower. So it's just a balance of what your risk tolerance and what you're willing to take. Why are you taking the trade, right? So that's that. Who's texting me? Sorry, guys. Okay. So look at that. We're rejecting off of the 1 minute. And we're now probably going to come down and take out some of the sell side, right? We're going to stop some traders out before the move continues. And again, like I told you guys, this is not a day to trade with live funds. There is no news. So we can tend to see some pretty choppy price action, right? Although I'm not going to lie. Let's see. Wow, this setup was really nice. There's probably an SMT here, if I had to guess. I'm not going to check ES right now. In fact, let's just do it. Why not? So if we go and we split this up, let's do ESU 2024. Did we have an SMT here? Look at that, guys. That is a perfect SMT. So this low, right? On NASDAQ, we made a higher low. On ES, we made a lower low. That's the SMT you're looking for. And then we had this perfect 1 minute IFEG right here, right? So right here is where you would have taken the long. Stop would be moved to break even once we take out this internal high. And then you could take profits maybe at 50%, and then you could take more profits at the highs that formed. So this is an incredible setup. I'm not going to lie. And we did have a really good delivery today. I mean, listen, sometimes that happens, but the whole point of trading is that over, for example, 100 no news Mondays, right? What percent of those days are actually high probability? Like what percent of those days deliver efficiently and deliver perfectly and allow you to make money? Not a high percentage of them. So if you're trading every single one of those no news Mondays, you're going to get smoked. Like over long-term data, you're going to see through your whatever system you use to backtest or track your trades that you're probably not profitable on these days over 100 of the days, right? So that's the issue. And that's why I don't trade on these days. Because you do get lucky sometimes. Like this is really nice delivery. Like I said, I'm not going to lie. It's very nice delivery. Are these equal highs too? Oh my god, what a setup, bro. This is literally the best setup of the day. Oh my goodness. Oh, that is so good. Alright, well, it is what it is. Look at that. SMT, I'm going to post this on X later, but there's an SMT, ESNQ, IFEG, equal highs. Like, it doesn't get any better than that. It really doesn't get better than that. So... look at this. We are delivering from the FEG. It's not an IFEG yet. If you notice, we didn't close above. And I'm going to get out of... should I... Hold on. Let me just take a screenshot of this quick so that I can post it to Twitter. So let's label this as an SMT. Do I have SMT here? I forgot if I put that there or not. No, I didn't. So let's make it black. We're going to label it as SMT. And we're going to put it in the middle. And we're going to make it bigger. All right, we'll put it as like a 20. And then on ES, we'll make the... Is this a 5-minute chart as well? Yeah, it is. Okay, perfect. Come on. Why is this not... Okay, hold on, guys. Gotta zoom in here. Okay, here's the SMT. Let's label that SMT and we'll make it size 20. Perfect. All right, and we will screenshot this. Hold on, let's make this bigger so we can see this properly. You know what, I'm not gonna put ES on this actually. I'm gonna make it just singular. We'll put it as a 1 minute chart here. Okay, and then we will label this IFEG, right? IFEG in purple. Whoops. All right. Here we go. You know what? I'm gonna make it a little bit different here. Settings, and we're gonna put this on the right. Alright, we're going to label this. Alright, perfect. So we have that saved here. Wow, that looks so good. So good. Alright, so again, what's going on here? Not delivering the way that it should. This, if this was a really good time to be trading, this would deliver immediately. So, in theory, if we close above this IFEG, that would be your long. But again, why do I not like it? I want to see more liquidity get taken. Too many people are long right now, and I just don't think that the market is going to deliver this efficiently. It might, right? There is a chance, but again, trading is all about your setups over time. Over 100 trades, is this going to be is this a good trade to take? Is this a quality trade? Probably not. In fact, I know it's not a good trade. I know it's low probability. And if I took this setup 100 times, I know over the whole time of 100 trades, I wouldn't be profitable. I would be losing more than I would be winning. So I would never take this. I would want to see liquidity get taken. So this low specifically and this low are what I am eyeing. If we get those taken out and then we get a new IFEG, then I would take that up to these highs. And again, only on a paper account. I'm not interested in risking this on a real account, especially on a no news Monday. Look at that. Insane delivery, but again, I would never take it. Over 100 times, it's not for me. And it is what it is. I'm okay with letting a trade run if I know that the odds of that hitting were not high. So it is what it is. But it is beautiful to see it running during the macro time. Just like the macros are designed. But yeah, some trades you have to watch them go without you. It is what it is. All right, let's take a look at some other stocks, right? Wow, QQQ is going crazy, of course. That's nice. Tesla is the only, is it the only Mag 7? I have a few other stocks apart from just the Mag 7s here, but Facebook and Tesla are the only Mag 7s that are down right now. Let's look at some of my swing trade positions. Not all of these are open positions. Some of them are just, stocks that I'm tracking. In fact, most of them are, but wow, Coinbase. This one dumped during that whole fear, that time of fear. It dumped all the way to 160. That's crazy. Shopify. Let's look at this on the hourly. This is one that I added, by the way, guys. Hold on. First of all, I shouldn't be. This is my QQQ trading profile, so I'm not going to be changing stuff there. But this is Shopify. This was my alert that I sent. The alert that I set up, and I added at 53, and then after earnings we had this massive move. So wow, that is crazy. So what am I planning to do with this Shopify position? Well, I think that ultimately the draw is going to be up to the 79. Where does that come from? I think it's from the monthly chart. I don't know where some of these drawings come from, but is it meant to be this high? No magnet tool here. Yeah, so I think the ultimate draw for Shopify is going to be this daily gap right here, and then these internal highs, and I think those come from the weekly chart. Okay, so yeah. Wow, that is a crazy gap. Look at that. I mean, so we could potentially get a sell-off back down into the 67, 64, 65s, and then we get the rip up to this internal high and also this internal high. You could take some profits there if you want. And then you could take some profits here if you want. If you risk a little bit more conservative. But I think all these areas are going to get hit eventually. And also, Shopify has this unbalanced monthly FVG. Is it a monthly? Or was it a weekly one? It's a weekly FVG. Woo! Yeah, so my ultimate draw, I mean, honestly, we could even go into this this FVG right here. Yeah, this one looks really nice too. Oh. Wow, guys, I am dead. I'm not gonna lie. I went out last night. I don't really drink that often, but I'm in Thailand and I'm trying to have a little bit of fun, so I went a little bit too hard. I'm not going to lie. I'm not going to lie. Yeah, so look at all this low resistance liquidity, and this internal high within a fair value gap is also a great target at 98.85, and then of course this unbalanced fair value gap on the weekly chart with a low of 119.12. That would be like an ultimate target for me. Not somewhere I would really hold to full size, but that's the ultimate target. But it's just nice when you add. I literally almost bottom ticked this. I added at 53, and immediately, with maybe 1 or 2 days of drawdown, by just a few cents, we had this massive rip. So it's so nice to be able to hold a position after a huge earnings gap up, because this trade is free for me. My stop is far. It was moved to break even the day that this earnings report happened, because if we sell off, if we get rid of this whole move that Shopify made, then in my eyes, there's no reason to hold this position. It's a swing trade. It's nothing to do with fundamentals. Nothing. It's only technical. It was an ad in a I think it was a daily fair value gap here. It was just a daily gap. That was where I added, and look how we filled it to the bottom perfectly, and just rip off of it. That is algorithmic price action. If you can try and tell me otherwise, if you want to convince me, there's no other way. It's all algorithmic. It's crazy how well these levels are respected. And this is how I trade. I know how to trade this way. I add positions with very tight stops, and that's the result that you get. Not every time, obviously, but a lot of the time that's the result you get. So, whew, this is where I'm going to take my first profits at 83. And then I'll take a good chunk off at 91, and then I will leave the rest to 98. And I'll maybe leave like 1 or 2 shares just for fun to this fair value gap. But I am not accounting for that just to get hit without any resistance. So these are my 3 targets, 1, 2, 3. So that's Shopify. SOXL is another one that we've been adding pretty heavily. I added this on the dip. I think I got it at like 27. Something like that. I have to check my cost basis. But I think this gap is going to get filled. And I think we're going to hit 35 easily. So from my add at 27, let's see what return I'm going to get on this. 20, almost a 30% return in a few days if we get it. So for me, that I'm going to take a majority of my profits off there. But I think in general, the issue is this is a 3x ETF. So it's like a leveraged... it's a leveraged ETF, and it decays. There's like time decay, if I'm not mistaken. So you have to be careful with these positions. But I think holding this for a swing is a great idea. I'm not going to lie. Okay. Can you guys hear me now? Yeah, you can. Okay. Sorry, I'm just this is like the first few times I'm streaming, I'm trying to figure out how to do it. Okay, then there's crypto, of course. Bitcoin. Let's take a look at Bitcoin real quick. Wow, this is crazy. Look at the respect of this stuff, guys. Like, it's unbelievable. 4-hour inverse fair value gap. We close above it. We take out an internal high. We come back, retest the bottom of the fair value gap, and we move higher. I'm telling you guys right now, I think the next draw on liquidity for Bitcoin... Whoops, I just clicked Finder accidentally. The next draw on liquidity for Bitcoin for me is going to be this internal high right here at 65,456. And then, of course, this internal high. We have a fair value gap right here that is unbalanced that I think we're going to get to as well at 68. This is where we might have a little bit of resistance. Maybe not, I don't know. This is the potential area of resistance, and I think we go all the way up to 73, all the way up to 80, all the way up to 100 eventually. I think it's going to be a big move, but let's see what happens. All right, guys. I think that's going to be it. I mean, the market is moving slow. Look at that. Took out our buy side. That is the draw for the day. I mean, it could go higher potentially, but I don't need to even watch that. But look at that perfect delivery, guys. I mean, this is, you couldn't get into this, right? We had this IFVG, we never closed above it, and then we had this huge candle. By the time it gets here, it's very likely it's going to hit, but the RR is terrible. I would never take that. So it is what it is. All right, guys, I'm going to end the stream here, and I will see you guys in the Discord if you're in it, and best of luck to you guys with the trading week. I will try and live trade. Today's Monday. I'll try and live trade on Wednesday and Thursday as well.